What's up, guys? Welcome to a weekly breakdown. Let's get straight into it. Top down, clean, and simple. So you know exactly what I'm looking at next week. I've been a bit on a break because I took a trip to another city and haven't been close to my desk. But I've actually been active on the market, and I'm going to do a quick review of what I'm looking at. So let's dive right into it. So starting first from the weekly chart. What I saw last week was that the previous week before that we kind of ranged inside the range of the previous week, the third week behind. That is what I'm showing right here. This red candle ranged inside this range. So no clean setups presented itself. And that's why it was really choppy on the lower time frames. So, but what we've seen this week is that price has swept this previous week slow, and so after the price does that, we anticipate that the next draw on liquidity would be that same week's high. So that's why I've marked this place as DOL, meaning draw on liquidity. So going to the lower time frame, which is the daily. On the daily, we can see that price kept on respecting this support zone multiple times. For over 6 days, we are stuck in this support. And that tells me that buyers are defending it aggressively. So as long as we hold this zone, I expect either continuation from here or at minimum a healthy reaction from it going into next week. So on a 4 hour time frame, let's go down to the 4 hour. On the 4 hour time frame, I've marked an imbalance because I am now structurally looking for buys, and I've marked a 4 hour imbalance here. And what I'm expecting is that if Monday opens, even if Monday opens with a gap up, I'm anticipating a pullback into this imbalance before the real expansion move. So we're going to be patient for that opportunity to present itself. So on the lower time frames, however, February has brought in a major influx of volatility with increased global trading activity. So the lower time frames are full of noise. So I'm only using them for refined entries, not for buyers, just to manage my trades, get into the trades and get out, and I'm going to stick to the higher time frames for direction and refine my execution below. So fundamentally, this past couple of weeks has been heavy, in terms of fundamentals. And we had Supreme Court ruling on Trump's tariffs on Friday. We had escalating tension between the US and Iran. We have a possibility of a war coming up, probably in the coming weeks. And we also have major tech earnings this week, this past week. So next week looks relatively quiet. The economic calendar has just three red folders: Trump speaking on Tuesday, unemployment claims on Thursday, and PPI on Friday. However, this is important. Geopolitical tensions remain high. So, with the potential of escalating conflict between the US and Iran, we must stay cautious. So, if tensions rise, we could see gold surging to new all-time highs. I already saw gold sitting on 5,108 dollars per ounce, and I already anticipate that Monday we're going to have a gap up and continue pushing. So overall, I'm cautiously bullish but risk aware. So I'm letting the higher time frames guide me. I'm managing risk aggressively, and I'm not gonna try to get chopped in the lower time frames. So on that note, I'll see you guys next week, and yeah, hope you all enjoy your weekend and have a great week ahead. Thanks for watching. See you in the next video. Bye.